Hi dear friends, today is Wednesday, January 10th. Let's look at the charts for the euro and the pound sterling and try to make forecasts. We see that euro came under pressure yesterday, which is no surprise. Germany, the flagship eurozone economy, reported poor economic data. Industrial production there shrank by 0.7% on month in November 2023. The annual rate plunged by 4.8%. The dynamic defied the consensus as analysts had projected expansion. The previous report on factory orders was also weak. Industry is a center stage of Germany's economy. Such poor data means that Germany could have completed the year in recession. Some analysts say that such a slowdown comes as a stage in a cycle and they don't see serious structural changes. Anyway, the euro went down in response and began the new year on a pessimistic note. The outlook for the euro seemed bullish in December, but such prospects have been fading now. After an upward correction, the euro could drop lower to 1.0827. It will depend on US inflation data, which is due at the end of the week. We will talk about it later. No statistics were released in the US yesterday. Comments by Fed policymakers made no impact on the euro-dollar pair. Today, the economic calendars for Europe is also empty, so I expect the instrument to carry on trading sideways with the prospects of the euro's large fall to support and the low of January 5th. In the US, oil inventories data will be released and John Williams is due to speak. Thus, volatility might increase in the New York session. As for the pound sterling, the Bank of England governor will speak in the second half of the day. If Andrew Bailey comments on monetary policy, this could trigger volatility in the pound-dollar pair. At the end of the year, the Bank of England's rhetoric was hawkish. The ECB was on the same page. This enabled risky assets to assert strength against the US dollar. Inflation in the UK remains the highest among developed economies, so the pound could regain its footing after Bailey's speech and recoup yesterday's losses. Let's discuss technical charts. So on the 1 hour chart for the euro-dollar pair, I pinpoint the levels of 1.0912 and 1.0879. In case the price declines, I plan to trade with these levels as entry points for long positions. The upward target is 1.0956 if the bulls want to take action and prevent a sell-off on the euro. In case 1.0956 is tested from the top to bottom, I will add long positions betting on targets at 1.0996 and even 1.1035 being hit. From there, I will plan short positions immediately at a dip. I will plan short positions from 1.0996 and 1.0956 only after a false breakout. I assume that the price might dip with a false breakout, climb by 12-15 pips in the first half of the day and a return to 1.0912. If the bears grab 1.0912, I will consider short positions, expecting a lower move to 1.0879 and even 1.0834. From there, I will plan long positions, bearing in mind a bounce of 30-35 pips. The British pound suggests a simpler trading plan. We may open long positions from 1.2681. The bullish target is 1.2714. A breakout of this level followed by the opposite test could be a good signal to buy, with the targets at 1.2739 and 1.2767. From there, I will open short positions, bearing in mind the correction of 20-25 pips. With a false breakout, I will open short positions with downward targets of 1.2739 and 1.2714. If the bears take over 1.2681 and the opposite tests from the top to bottom, will trigger the buyers' stop orders. The pound could fall to 1.2650 and even 1.2612. From there, I will consider long positions, reckoning a rebound of 30-35 pips. Good luck in trading.